basically we've had an environment, haven't we, over the last few years where everyone's lent towards the US, whether it's the tech, whether it's stocks, the dollar. US exceptionalism has really been at the front of investors' minds. And I think basically that's being called into question at the moment. Policy in the US, the market unsure about exactly what's going to happen. Maybe we need some diversification around the rest of the world, and we're definitely seeing that flight away from the US into other markets, and whether it's through stocks, whether it's through the dollar, and I think fixed income is really interesting because it's not just we're seeing support for the front end and selling off in the long end, so a huge twist in the curve, which isn't the norm under sort of normal market situations.
What do you read into that twist? What should we take away from that?
I think it's the uncertainty about exactly what is going on with policy. Are we likely to see the Fed have to move quicker? Ultimately, does that cause problems in the long end? Does that mean inflation can become more anchored over the longer term? The market's really trying to get to grips with exactly what's going on, and obviously all the news that we're hearing around the president and the chairman, that's not helping the situation in that sense.
Well, that's exactly where I was going to go next. It felt like the action we saw yesterday was in response to President Trump laying the criticism on even thicker to Jay Powell, calling him a major loser, Mr. Too Late. What exactly is the concern here when it comes to the Fed? Is it that Chair Powell could be forced to leave before the end of his term? Is it around the central bank's independence and being able to remain independent under a President Trump? What exactly is concerning there?
I think it's a mixture of everything. I think it's huge uncertainty. Obviously, when you go back and look through history, central bank independence is important. And, we see that in other economies. The market definitely likes it. Calling that into question is definitely having an impact. And then ultimately, what does it ultimately mean? Because you still got a central bank with the Fed that they are stuck in the middle at the moment. They're stuck in the middle of policy, which is going to create inflation in the near term, probably going to impact growth. That's almost a given. How do you react to that? Do you wait? Do you see the whites of the hard data eyes? Remember, back in 2023, everyone thought we were going into recession. The soft data was pointing it, and then it never fell through the hard data. So is that in the back of their mind? But also they're sitting in a position where inflation, yes, it's coming down, but it's still above their target to start with. So they are really in a bit of a sticky situation. I think they do end up cutting later on this year, and maybe even more than what the market is pricing. But I still think they're going to be on hold until they start to see that hard data weakening. Because remember, the president could reverse some of these tariffs at any point. Yeah. So we've already seen some pullback. And so again, they're trying to deal with all that uncertainty and try to keep a steady ship.
And they could come out with a tax package, which is also, potentially a significant offset. We haven't heard any tangible progress on that front yet.
Yeah, no, absolutely. And I think from at the beginning of the year, everyone was thinking the sequencing would possibly be growth supportive start, and then the negativity would come through. We've obviously had the negativity around tariffs, but absolutely we could have that big tax package, that beautiful bill come through. And then how does the Fed deal with that if that is also going to be inflationary? So it's a really tough spot they're in at the minute.